Okay, there was the PPI news reaction this morning out of the 7:30 U.S. Central Time news release, and then we crawled back up to the 8:30 U.S. Central Time or Chicago Globex Time U.S. cash session open. So what I'm going to do here in a couple videos in a series, I'm going to show you different ways to trade using symmetrical Renkos and maybe some other bar types configured in a unique way. We're using the iGrid system, which has very unique math on board, and we have two-dimensional smoothing. So it adds a capability to the indicator that I really don't see in almost everything out there. And boy, does that work good with our ability to adjust the color, the thickness of the indicator components, and multiple axes of adjustability. So you can make the indicator either more responsive to price or less. You can really dial in this indicator for both going down and doing quick scalping type operations intraday, or for going after and hitting, like swing trading. This is by far the best market timing tool there is. If you want to swing trade indices or oil or gold, holy cow, you can't. This baby is beautiful for swing trading. That's why we're adding it to the Thinkorswim platform. So let's just kind of take a look at some ways you can do asymmetrical, or I should say symmetrical candle trading in conjunction for some simplistic, either automated trading using our strategy, or we do have outputs on the indicator, so you can tie it into Markers Plus, Bloodhound, Blackbird, and so on. So we had the 7:30 news, big spike lower, crawled up throughout the day. But then here we come to the 8:30 U.S. Central Time open. So let's kind of focus on that time period going forward. So now in this case, if I have automation running or if I'm trading just mechanical, manual discretionary, I'm basically waiting for a signal. Ooh, that was a beautiful pullback and lift right there. Get long, put a stop just below most recent price pivot. I'll show that in a separate video. Working those style of trades is really simple, quick scalping setups. But let's get in. If I just was running either automation with our iGrid Evo Strat, our NT8 strategy, or maybe you're using the tools in conjunction with Markers Plus, Bloodhound, Blackbird, doing your own thing, hey, that's fine too. Even on a morning where the market had to tighten its range before we finally got some movements, I'm going to show you that the chop is not what will ever kill you or blow out your TPT account or your Apex account. There's other things. It's trading too much size. It's scaling into positions that are running against you, or, whatever the case may be. You're gunslinging. I'm just going to say if we just traded this like a dumb monkey, just purely mechanical with no thinking, how this works. Okay. We get a flip from upward bias to downward bias. So in this case, if I'm trading either with the automated system that we have in our NT8 strategy, or let's say you're doing something with the NinjaTrader ATM function and you're clicking the buttons manually, or, Markers Plus, Bloodhound, and so on. The key is right here is at the flip, you go short. And you stay short, and as the market runs away from your entry point, so the entry point would be right in this area, where would you put your stop? I usually put my stop, see where the indicator shifts from upside momentum and then gets a spike and it changes color. That intersection area, that's where I have my stop. So it's pretty easy. If you're trading on a particular chart, you should know then what that typical distance is. So you can have that typical distance set either in the ATM function, if you're over clicking buttons trading these manually, or you have that already set as part of your semi-automated or automated approach. So even in a choppy market, so perfect example this morning, the chop isn't what's going to destroy your account. You can hold your own through chop, and you're going to get a move, and usually get at least two nice moves, usually in the first hour of the day. Sometimes right away out of the open, the institutionals have one little move, and then they just rip it one way or the other. But I picked this morning because of the way it played out by design, just to show you with all kinds of flipping back and forth. That's not your enemy. That's not what's ever going to blow out your account. So we get short, then we get a flip to the long side, we get long. So we get short, then right here we get a long signal, then right here we get a short signal. And right here, we get a long signal. So what I like to do on something like this is trade in units of 3. Now you could do this with units of 2. I like units of 3. So if I know what my fixed typical stop is per entry, so there's the intersection, the indicator, that'd be my entry. Here would be my entry, the intersection, the indicator would be my stop. Here's my entry. The intersection of the indicator flipping from Dodger blue to aqua is my stop. So I'm talking about trades with very small amount of risk. Beautiful way to trade for this approach. I get into the trade starts marching away. At any point, I'm about 1.2 or 1.5 to 1. My stop should go to break even plus a tick or two. And then the trade's, oscillating, not doing a whole lot. And then we lift and we get a flip to the long side. So I didn't really make anything and I didn't really lose anything on this trade, other than I like to trade in units of 3. So at the 1.5 to 1 mark, or 1.2 or 1.5 to 1, if I'm trading in units of 3, I can have it where I just have one contract come out and then the other 2 stay on as runners. That way now I put a little money in my pocket and then I get blipped out right here on the remainders at basically a few ticks before it flips to the long side. So does that make sense? So I took one off. So now I'm long. It went beyond 1.1, about 1. Probably 5 or 6 or 7 to 1. I had one of my 3 contracts come out. Now I'm holding 2. It comes down. My stop had moved to break even plus. Blips me out on the remainder. So on 2 junk trades, I've made just a little bit of money. So I'm long, gets blipped out. Now I'm short. Right away after I get short, I never get to 1 to 1. And it comes up here. And then I basically right away get a trade back the long side. Now that trade I lost on. So I lost from my entry right here to my stop. I'm blipped out. So I get stopped out just before we flip to the long side. Now I'm long, there's my stop, and that one rips. Yeehaw! Part of the trade came out. One of my contracts came out at about 1.2 to 1 to 1.5 to 1. And the other 2 ran. And where would I take them out? Well, in automation, you can decide how tight you want your trail stop. But if I'm doing it visually, the first time I get pullback in candles and my Heikin-Ashi color shift, I need to either blip trade or make sure I tighten my stop up. If if it's run this hard, do I want to give a bunch of that back? Heck no. So, you can put your stop somewhere in alignment wherever your last plot segment is on the trend bias portion of the indicator. And eventually, as the price comes down and it plots more and more, it'll stop you out. Or if you get a flip counter, then you want to get out. Now you get a short trade. So here's a short trade. Enter, stop right here, rips in your intended direction, lift with candles, Heikin-Ashi color change, you're done. Then you get a long trade. You're in. Stop in alignment with the intersection of the candle. You're in with the candle on the lift, where the trend bias shifts from Dodger blue to aqua. I call that the intersection point. That's the most, you don't need to have more risk on. It rips, takes off. You get a bit of a pullback with some candle color. As long as your stop's to break even plus and you've locked in maybe at least 2 to 1, it lifts, starts running again. Make sure your stop's near that price pivot. As price is running away, you could have your stop following the most recent plot segment of the indicator until eventually you get blipped out. Then you get a short trade, and that works. And then you get a long trade, and that works. So Normally what happens when I trade this approach, what I'm using this approach for is to get to a daily objective. So, I'm getting flipped back and forth. I'm watching the automation, but my P&L is never that ugly. And then as soon as I get that rip, I'd be done. For the size I trade and the way I trade, that move right there puts me over the top on a 150K account, getting to like 710 to 760 bucks on the day, or on a 300K account, getting up to about 1110 bucks or 1120 bucks on the day. And if I just barely missed it there, I would have for sure gotten it right there and I'm done for the day. And that actually is a day where it took a lot longer than typical because in the beginning, the market was kind of coiling up and you had to survive that. But the iGrid is so good that you can really get it dialed in on the time frame that you prefer, and you can hang through this type of price action. Just trade mechanical, very fixed, simplistic rules. Use the indicator and, tied into Markers Plus or tied into Bloodhound or tied into Blackbird, however you want, or trade the ATM or trade our strategy with just the flips until you get your daily goal that you can set in the settings of the strategy. So I just wanted to show you one way that I've been gravitating to for one of the strategy setups that I'm using to get to a daily goal. Now, that's not the only way, but that is a really easy way to, get to your daily goal and be done on the day. Or at least trade through till you get the first big move. And when I say big move, I'm talking about where the NASDAQ's, moving 60, 70 points or more at a minimum. That's a big move, that you can take advantage of to have the ability to get over a daily goal. Okay, I'm going to show you some other videos, how to trade these pickup points in a running trend, whether they're, in a downtrend or uptrend. There's another way you can trade where, following the trend bias, when you get a pullback of a 3 and then lift to 2, how you can trade those setups where you would enter as long as the trade's in alignment with your trend bias, stop at the most recent price pivot, and as it's ticking in your intended direction, every 2 to 3 bars, your stop is moving until you get to break even plus. So whatever little movement you get, you're using that to right away get your stop cleaned up and then get a free trade on. Once it starts running, then you can go from a very active trend stop or trail stop movement to one that's more passive until you get a flip or until you get some daily profit objective. So I'll cover that specifically in a different video, but this approach to me, pretty simplistic, mechanical. You're basically working flips to flips until you get one move that gets you over the hump. That way you minimize your exposure to the market. You try to get in and get done. Like a day like this today, I know on one set of the TPT accounts, that move I was done. On another account, I was going for a little bit more objective, and about midway through on the push, I went over daily objective, and it stayed in the trade because I set my daily profit limit a little bit farther, but as I noticed the P&L was beyond, and then I got the rotation, then I blipped out the trade. So I didn't trade any of this garbage the rest of the day. Well, it wasn't garbage. There were still good moves. I'm just saying I didn't have to sit there and be exposed to the market and keep watching it. So I was done today like well before 10 a.m. U.S. Central Time. Now, tomorrow, we have CPI news. So sometimes on CPI news days, I'll have the system. I can literally have it start looking for trade activity from 3 minutes after. So 7:33 forward, if I get a flip, I'll right away let it start working trades. I like PPI days. They've been very, very good moves on those news days. Now, some prop accounts, you can't trade 1 or 2 minutes before the news, up to 1 or 2 minutes after. So I just always, on a heavy news item, I won't even think about getting in the market till 3 minutes is played out. So there you have it. If you have any questions, info@gridalgo.com, and I'll put more videos on different ways to use different bar types for simplistic mechanical trading.